The information provided in this video is not financial advice and should not be considered as such. It's always best to consult with a licensed insurance professional before making any decisions about your renter's insurance. Welcome to the Everything Money channel, where we explore the world of personal finance and provide you with the knowledge you need to make informed decisions about your money. Today, we're going to talk about a hidden loophole in your renter's insurance that you may not be aware of. Renter's insurance is a type of insurance that protects against loss or damage to personal property, as well as liability coverage in case someone is injured on the rental property. It's an essential type of insurance for anyone who rents a home or apartment, as it can provide financial protection in the event of unexpected losses or damages. But did you know that there's a loophole in many renters insurance policies that could leave you vulnerable to financial losses? In this video, we'll explore what that loophole is and how you can protect yourself. First, let's take a look at what renters insurance typically covers. Policies usually cover losses or damages to personal property such as furniture, electronics, and clothing. They may also provide liability coverage in case someone is injured on the rental property. However, there are often limits to the coverage, and some types of losses or damages may not be covered at all. For example, many renters insurance policies do not cover losses or damages caused by flooding or earthquakes. Even when they do, coverage limits may apply. This is where the hidden loophole comes in. Many policies include clauses that exclude coverage for specific events like flooding or earthquakes unless you purchase additional protection. If you live in an area prone to these risks, you may assume you're covered when you're not. To protect yourself, the first step is to review your policy carefully and understand what is and isn't included. Read the fine print and ask questions if anything is unclear. You should also consider purchasing additional coverage for risks relevant to your location. Finally, compare rates from different insurers to find the best value. The reality is that many renters are unaware of this gap and leave themselves exposed to financial loss. Some don't realize additional coverage is required, while others underestimate its importance. This issue doesn't just affect individuals. In large-scale disasters, lack of coverage can lead to widespread financial strain and displacement. That's why understanding your policy is critical. You can also reduce risk by taking practical steps such as securing valuables, storing important documents safely, and considering supplemental coverage even if it's optional. Insurance companies also play a role. They are responsible for clearly explaining coverage details and educating customers about additional protection options. Transparent communication helps reduce misunderstandings and financial surprises. Looking closer at coverage types, standard policies typically include protection for personal belongings and liability. However, coverage for floods, earthquakes, or off-site property storage is often excluded or limited. Coverage for issues like mold or water damage may vary by policy, so it's important to confirm details with your provider. Costs can vary depending on factors like location, property value, and coverage level. Many renters pay between $15 and $3 per month for basic policies, though this can differ based on individual circumstances. Discounts may also be available. Some insurers offer lower premiums for good credit, security features like smoke detectors, or bundling multiple policies. When shopping for renters insurance, compare multiple providers. Review policies with similar coverage levels and deductibles to ensure a fair comparison. Read the fine print and confirm details before making a decision. Also consider the reputation and financial stability of the insurer. Reviews and official records can help you assess reliability. The claims process is another important factor. Most insurers provide a claims hotline and assign an adjuster to evaluate damages. If disputes arise, mediation or arbitration may be required. Renters insurance works by transferring financial risk to the insurer. In exchange for premiums, the company agrees to cover specified losses. Premiums are calculated based on risk factors such as location and asset value. Benefits include protection against unexpected losses, liability coverage, and sometimes temporary housing support if your rental becomes uninhabitable. In some cases, premiums may have tax implications, but this depends on your situation. A tax professional can provide accurate guidance. To get started, determine how much coverage you need based on your belongings and risk level. Then compare policies, review details carefully, and choose one that fits your needs and budget. If you're unsure, research online, read reviews, or consult a licensed insurance agent. They can help you navigate complex situations like shared living arrangements or home based businesses. It's best to purchase coverage as soon as possible, especially when moving into a new rental. Policies usually take effect quickly, but confirm with your provider. There are risks to consider. You may not have enough coverage, or premiums may increase over time. Deductibles and exclusions can also impact your out of pocket costs. Not having renter's insurance at all is a major risk, as it leaves you fully responsible for losses. Specialized coverage like flood or earthquake insurance may have unique limitations, so review those carefully. Another overlooked risk is insurer reliability. Choosing a financially stable company reduces the chance of claim issues. Working with a reputable insurer provides confidence, support, and a smoother claims experience. Final advice: take your time and do thorough research. Read your policy carefully, ask questions, and compare options before committing. Consider working with a licensed insurance agent for guidance. Review and update your policy regularly to reflect changes in your situation or asset value. Renters insurance is an investment in financial protection. With the right approach, you can avoid gaps in coverage and ensure you're prepared for unexpected events. The information provided in this video is not intended to be personalized financial advice. Please consult a licensed insurance professional before making any decisions about your car insurance policy. Welcome to the Everything Money channel, where we help you navigate the complex world of personal finance. Today, we're going to talk about something that's really important to all of us: car insurance. We all know that car insurance is a necessary evil, but have you ever stopped to think about what your insurance company is hoping you never ask for? Probably not, but it's something that could save you a lot of money in the long run. So let's dive in and explore three things that your car insurance company hopes you'll never ask for. Before we get into that, it's important to understand how car insurance works. Car insurance is designed to protect you financially if you're involved in an accident. It can help cover repairs to your vehicle, medical expenses, and even legal fees if you're sued. However, car insurance policies can be complex, and it's easy to misunderstand what is and isn't covered. That's why understanding your policy is essential. One key concept is the difference between collision coverage and comprehensive coverage. Collision coverage pays for damage to your vehicle after an accident, while comprehensive coverage handles non-accident related damage such as theft, vandalism, or natural disasters. Another important factor is the deductible, which is the amount you pay out of pocket before insurance covers the rest. For example, if your deductible is $500 and the damage is $2,000, you pay $500 and the insurer covers from $500. Now, the first thing your insurance company hopes you never ask for is a detailed breakdown of your policy. Many people don't read their policies carefully, which can lead to paying for unnecessary coverage. By asking for a full breakdown, you may discover optional add-ons like roadside assistance or rental coverage that you don't actually need. The second thing is a review of your driving history. If you've maintained a clean driving record, you may qualify for discounts. But if you don't ask, you might miss out on those savings. Regularly checking your record and asking about available discounts can reduce your premiums. The third thing is a comparison of rates from other insurance companies. Loyalty doesn't always pay in this industry. By comparing quotes, you may find the same coverage at a lower price elsewhere. Understanding these 3 points can help you save money and get better coverage. These three areas matter because they directly impact how much you pay and what protection you receive. If you don't fully understand your policy, you may overpay or lack coverage in critical situations. For instance, having collision coverage without comprehensive coverage means you're protected in accidents, but not against theft or natural disasters. Reviewing your driving history can unlock discounts such as safe driver incentives, which can significantly reduce premiums. Comparing rates across companies ensures you're not overpaying simply due to convenience or habit. To make this easier, tools like a car insurance policy analyzer can help. This type of tool reviews your policy and highlights areas where you may be overspending or underinsured. It can suggest adjustments like increasing your deductible or removing unnecessary coverage. For example, if you're paying $500 annually and the analyzer finds a similar policy for faster $1,200, that's a $300 yearly saving. Another useful tool is an insurance company comparison tool. This allows you to compare multiple insurers quickly and find the best balance between cost and coverage. It can recommend switching providers or adjusting your policy for better value. Using both tools together gives you a clearer understanding of your insurance situation and helps you make better decisions. A simple strategy is to use these tools regularly. They help you stay informed, reduce costs, and ensure your coverage matches your needs. Beyond savings, they also help you understand your policy and improve your financial awareness. A practical step by step approach would look like this. First, analyze your current policy to understand what you're paying for. Second, compare rates from other insurers to identify better deals. Third, review your driving history and look for discount opportunities. Fourth, monitor your driving behaviors and make improvements where possible. Following these steps can lead to consistent savings over time while ensuring proper coverage. However, there are risks to be aware of. One major risk is being underinsured. If your coverage is too low, you may face large out of pocket expenses after an accident. Another risk is overpaying for unnecessary coverage. Some insurers may also increase premiums without clear communication or try to sell add ons you don't need. Staying informed and reviewing your policy regularly helps avoid these issues. Reading your policy carefully and asking questions is essential. It ensures you understand your coverage and can identify areas where you can save money. The key takeaway is that car insurance doesn't have to be confusing or expensive if you approach it correctly. By understanding your policy, using the right tools, and comparing options, you can get better coverage at a lower cost. Always review your policy, ask questions, and shop around before renewing. Small changes can lead to significant savings over time. Car insurance requires attention and awareness, but with the right approach, you can stay protected without overspending. The car insurance policy analyzer and the insurance company comparison tool are both valuable resources that can help you navigate your options effectively. By using them and following a structured approach, you can ensure you're getting the best possible deal. Interest rates and premiums can vary. For example, a savings account might offer around 2.0%, while a car loan could be closer to 5.0%. Always check directly with your bank or insurance provider for the most accurate and up to date information.